In this video, I'm going to break down exactly how to pass prop firm challenges, get payouts, and stay consistent using data pulled from prop firms. By the end, you know exactly how to structure your risk, your targets, and mindset to get funded and stay funded. Welcome back everyone, and if you don't know me, I'm Mano. I've been trading for 2 years and currently manage multiple funded accounts. Prop firms have been a huge part of my trading journey. They allowed me to hit many of my goals, especially allowing me to be financially stable and to leave my 9 to 5. The only reason I've been able to pass these accounts consistently instead of wasting money like most traders do comes down to 2 simple steps that I'm about to share with you guys in this video. So the journey of a trader can be put into 3 categories, starting from unprofitability to break even to consistent profitability. And to reach the end level, it's important to trade with purpose and not with hope, because everyone is approaching prop firms like they're a roulette. You're trying to make massive profits of 10%, 15%, or even 20% on a single account in one go, when what you should be doing is leveraging the opportunity to access huge amounts of funding with minimal spending. Now, there's 3 types of commonly known traders out in the market. There's one that's unprofitable, then there's one that's a break-even trader, and then there's one that is a profitable trader. We're going to break down each type of these traders and see the traits and attributes they have and how you can improve to become a consistently profitable trader. Now, the first type of trader, which is basically an unprofitable trader, they usually have a gambler mindset because prop firms make so much money selling the traders the illusion of a quick path to wealth. You buy a challenge believing that gaining access to 200k funded accounts will make you rich, but in reality, most traders end up losing the challenge. And the most common reason for an unprofitable trader to lose an account are such. They're known to be overtrading, which basically means that they could be taking 7 to 10 trades within a day. They have poor risk management, so they often use no stop loss, no take profit points, and almost 50% of the cases within the prop firms have been dealing with such traders. They have a constant lot size, which basically means that they are not calculating their lot sizes for each trade that they're taking, which makes their risk sometimes more, sometimes less than whatever average that they should be taking. They have a low or a negative risk to reward, usually 1-to-1 or even lesser than that, because they're hesitant, they're fearful, and as soon as they see a bit of profit, they close the trade prematurely. And they love news trading. So they're gambling through CPI, FOMC, NFP. These are all red folder news. And if anything, you should be avoiding trading those windows. And the average lifespan of their account is between 5 to 7 days. That is because they don't have no strict risk management, and all of the traits that we've discussed so far causes them to lose the account. Now, the second type of trader is basically a break-even trader. This is the type of trader who is basically learning a strategy, trying to stay consistent. They're heavy on back testing as well, and they're basically on it. They're no longer gamblers, they're survivors. They do have a plan, but not yet the discipline to follow it through every single time. So some of the traits you might find within a break-even trader are as such. They have a sense of risk management, but execution is inconsistent. Stops are sometimes respected, sometimes moved. They take fewer trades in comparison to a trader that is unprofitable, but still mixes solid setups with impulsive entries. Then another trait that is found within them is that their risk to reward actually fluctuates. Some good 1 to 2 trades, other closed early from fear or impatience. They do have a decent win rate, which is between 40 to 50%, but expectancy near zero due to inconsistent risk to reward. Overall, they are a break-even trader. Small profits that they do make are eventually wiped out because of emotional mistakes and revenge trades. And overall, they are improving. They do have that sense, but they are not fully detached from the outcomes yet. So this is, some traits that you might find within a break-even trader. Now we're going to move on to the third type, which is basically a profitable trader. And this is the end goal. This is basically what each one of us should aim to be. Now, a profitable trader, according to the stats, only 5 to 10% of the traders out there actually pass an account, and even a lesser percentage get to the point where they're asking for a payout. That's a number very, very low. So we need to have some very solid traits within ourselves to actually be able to get to the point where we're passing accounts and staying consistent, getting payouts, and actually compounding on it. So what a profitable trader basically does is they have consistent risk and consistent stop loss and TP, which basically means that they might be risking 1% in every single trade that they're trading, and they calculate the lot sizes in accordance to that. They have lower daily exposure, and their mode is survival rather than making quick bucks. They focus more on quality rather than quantity, so fewer high probability setups with risk to reward of at least 1 to 2. They have a proper proven session edge, so they place trades during high liquidity windows and avoid dead times. And the last one, and one of the most important ones, is they have patience. It often takes longer to pass than to breach by design, so you need to show up every single day with a lot of discipline and patience. Now for context, I do trade with technical driven approach. I have my own trading system and a mentorship program where I trade and teach traders how to trade, get funded, and more importantly, stay consistent throughout their journey. If you're interested, you'll find a link to this in the description below. Now the main question is, how do you move from an unprofitable trader to a break-even trader, and then finally from a break-even trader to a profitable trader? The number one thing that you should focus on is the mindset shift before you even take a challenge. Now look, most traders fail their prop from challenges long before their first trade, not because the rules are unfair, but because their entire approach is built on the wrong foundation. Social media makes 10% look so easy, quick payouts, flashy dashboards, but in reality, the 10% isn't small. When you're trading hedge funds or even investors' capital, a 10% annual return is considered excellent. So the key shift here shouldn't be how fast can I pass this account. It should be how can I stay consistent. Because look, you're not here to beat the prop firms. You're here to work within the system. Treat the firm like leverage, not a lottery. This is very, very important. So if you can generate a 3 to 4% edge under risk limits, you're already performing at a level most retail traders can't even sustain. So the goal isn't passing one challenge, it's building scalable consistency across multiple accounts. Now let's break that down. What do I mean by scalable consistency across multiple accounts? Now let's say you had a 100K challenge. That 100K challenge cost you $500. After getting funded, once you've passed your evaluation phases and you're on a funded level, if you book a 1 to 3 risk to reward trade with 1% risk, that will make you $3,000. And most of the prop firms out there actually refund your evaluation fee once you've actually managed to get a payout. So you're booking 3%, and then you're also getting your valuation fee. Now, obviously, in most cases, there's an 80-20 or a 90-10 split. So let's say in this case, it's an 80-20 split. So you will be getting $2,400 after the split plus $500. So you're actually getting $2,900. That is 480% return on investment. From here, what you need to do is you need to reinvest. So you take that $500 from the payout that you received and you buy a new 100K challenge. To scale your funded capital, what goes in your pocket is basically $2,400. Now, once you get your first payout, you've basically made your money back. And the best part is you still keep your funded account. So from there, it turns into a money-making machine. Most prop firms pay you out every 2 weeks after the first cycle, or some even go weekly. So what I like to do is I take small part of the profit, grab one new challenge each payout cycle, just one, you don't need to rush it, and keep repeating that process. And before you know it, you'll be managing 400k to 500k capital in total funding without ever risking your own capital. Now that is even if you only average 3 to 4% per month per account. That's around $2,400 to $3,200 in payouts, all generated from profit, not new capital. So from this point on, all you gotta do is every new challenge you buy is funded by the system itself, not your pocket. That's how compounding starts. And if you think of it, you might be like 3% is too less, 4% is too less on a 100k account. But think of it how you're going to compound on it. 3% a month on a 400k, which basically is either you can have 400k accounts or two 200k accounts, equals to $12,000 a month. And after the split, after the 80-20 split, you get $9,600 in your pocket. And that's the monthly one. If you keep at it, if you keep showing up, stay disciplined, follow the same system that you built for yourself, in a year, you'll be making $115,200. Now you tell me whether that return on investment is amazing or not for someone who's just starting off on trading. Now, the next thing you gotta do is you gotta build a reliable, boring edge that gives you at least 3 to 4% in profit. Now, every consistently profitable trader eventually realizes that boring is what pays. You don't need the perfect setup or an extreme risk to reward. You need a process you can repeat effortlessly, even under pressure and without any emotion. And to be honest, these two videos within my channel is all you need. These are worth more than most paid courses and they're completely free. And on top, you also get my strategy playbook so you can apply this information that I'm giving you today and start trading on prop accounts. So here's the plan. When you do purchase an account, this is what I want you to do. I want you to take it step by step. Don't go for the biggest account size, meaning that don't right away purchase an account that's 100k, 200k. Start with 5k or 10k or the minimal account size that you have within the prop firm and try to pass that first. The reason I'm telling you to do this, it's because when you start trading your first prop account, a lot of things that you don't realize you can feel as a trader will surface. So you need to be attacking those things, taking care of these things. And these emotions could be, you could be feeling FOMO, you could have greed, you could be impatient, you could be over risking, over trading. A lot of these things will pop up and you need to counter them one by one. So buying a big account will only make it difficult. The second thing I want you to do is cap your risk. Have a percentage that you are willing to lose every single day. Now, most prop firms, they give you 4% daily drawdown and 8% or 10% max drawdown. Now, with that kind of drawdown, what I want you to do, if the daily drawdown, let's say, is 4%, make a personalized drawdown limit. So you can have either, let's say, 3%, 3.5%. In this way, you're not actually risking the account to be breached. The third thing I want you to do is aim for at least 1 to 2. Do not be accepting low negative risk to reward. And opposite of that, don't be going for home runs. You want to keep your risk to reward sustainable, meaning that this is a risk to reward or a percentage that you can actually achieve every single day. Now, limit the frequency of trades that you're taking within a day. Max it to 2 or 3 trades. This will help you stay disciplined and help you not overtrade. Another thing I want you guys to do is avoid direct news entries. You want to avoid trading through red folder news because there's a lot of volatility and it can cause slippage. It can cause you to lose an account. This is very, very important. You need to trade with your session, instruments with focus, not everything everywhere. Don't be sitting at random times trying to catch a move because your mind, your brain will create opportunities within the market that are not there and you might end up taking trades that are not high probability. And lastly, if in drawdown, do not reduce your risk. I know a lot of people tell you when you're in drawdown, reduce your risk. But statistically speaking, when you're following the same strategy in every trade, your fourth or fifth trade is going to be a winning trade, and that trade could actually bring you back to break even or even in profit. So don't reduce your risk. If let's say you are -8% in drawdown or even -9% in drawdown, then you can half the risk or risk lessen than that as well. But if that is not the case, then maintain the risk percentage that you were taking when you were break even or when you were up in profit. Now, these were the things in terms of technicals and mindset, psychology related. It is also important that you are choosing a prop firm that is reliable, that has good reputation. So what I want you to basically do is focus on these three key things when you're selecting the prop firm. The first thing that you need to be focusing on is the reputation. You need to see how long they've been in the business and what people are saying about that, basically the reviews. So you can check Trustpilot, type in the prop firm that you're willing to purchase an account from, and see what people have to say about it. Another website that you can use is basically Prop Firm Match, which lists reputation, the cost, profit to drawdown ratio, and many other things as well. So the number one priority is reputation. You don't want to pass a challenge only to have a firm deny you a payout. The second thing you want to pay attention to, profit to drawdown ratio. A firm that requires 10% profit is about 20% harder than the one that requires 8%. A firm with an 8% profit target and a 10% drawdown is more lenient than the one with 8% target and 8% drawdown. So ideally, what you want to do, you want to go for a prop firm that is giving you a reasonable profit target and a generous drawdown limit. And lastly, what you want to be paying attention to is the price. Most firms run discounts. That's a given. They'll put out a 50% or 60% discount. But be careful of the prices that are way too cheap. That's often a red flag that the firm might not last. So be careful if they're offering an account that is way too cheap, below the standard prices of the prop accounts, then you don't go with them. Now, if you follow the three things that we have discussed in this video, which is basically looking at the mindset, making sure that the shift happens before you actually purchase an account. Secondly, having a solid, reliable strategy. And thirdly, making sure that the prop firm that you're going with is actually reliable. Honestly, I know trading isn't easy. There will be hard times, but once you master it, no one can take it away from you. It's just about showing up every single day, even when it is hard. And if you're already profitable, you know trading is all about discipline, not excitement. It is boring, but boring is what pays. That is why I mentor traders personally, helping them go from unprofitability to becoming part of the top 1%. This program that I offer is a one-to-one focused based program and not in a group setting. So it is customized to the needs of the students, and I personally build a roadmap for each one of them and review every single trade until they're funded and consistent. So if you want to work with me, the link's in the description. And as always, thank you for watching, and don't forget to like and subscribe for more content that actually helps you grow as a trader.